Well, let's just look at commodities and what's top of mind there. Manisha is here with what she's watching closely. Manisha, good morning.
Morning, Prashant. Thank you for that. Well, I'm talking about metals where you have the precious metals on a declining move. But when you look at the industrial metals, they seem to be doing well. I'll start with gold prices, which has fallen yet another 1.5% in the overnight markets towards 33.50. This is a stark price in comparison to where we were on Friday at 35.30. So it has been more than $200 of a decline coming in for the markets there. Well, this comes in after the U.S. president yesterday put on X that gold will not be tariffed. Remember, last week, Thursday and Friday were a couple of days when it was complete confusion on whether or not gold is going to be tariffed by U.S. Remember, 230 or 250 tons of gold that U.S. buys, 60 to 70% of that comes in from Switzerland, and that is tariffed by 39%. Industrial metals is a different deal, but when you talk about gold and silver, it clearly has been a stance that it would not be tariffed. So this really created confusion in the global markets where we saw $100 per ounce of a move happen in matter of hours, and that really seems to be easing right now. So when you look at the prices itself, well, we have seen a decline come in. Also, what is leading to decline in gold is U.S. signing an executive order extending pause on U.S. tariffs on China for another 90 days. There's no reason for safe haven buying, and that is the reason gold has declined. The other macro point that gold seems to be taking cues from is that U.S. has signaled that no new sanctions on Russia crude while talks continues. So that also tells you that there's no reason to buy gold and silver right now. So it's not just gold. We've seen silver also decline 2% in the overnight markets. The support, though, comes in for the industrial metals, especially steel prices trading near 7-month highs. The China steel industries may see capacity cuts because of pollution and overcapacity on construction input. That has been supportive. And then there is likelihood of capacity cuts as well. China steel exports have gained up by 11.5% in 2025 so far. Supportive factor there. And also, when you look at the iron ore markets, here as well, we are trading at around 4-week highs. Chinese imports have been at around 100 million tons for the month of July, which is up by nearly 2% on an year-on-year basis. And then also restocking activity in the Chinese mills has been supportive. The aluminum prices also have been on the higher side, trading at near 4-month highs at this point. The Chinese production is up 3.2% in the month of June on a month-on-month basis. But remember, China, for one, is going to cap its output at 45 million tons, and production between Jan to June, in the meanwhile, is up 3.3%. All eyes, though, on the U.S. inflation numbers today, and the further cues would come in from that one.
Yes, absolutely, and we'll look out for those numbers for sure. Manisha, thanks very much for the update for now. We have to take a